This is a pretty significant drop, though not necessarily unanticipated, given all the gloom and doom we had coming into this year.
Exactly. When I think back on this year and when I talk to deal makers, the one word that comes up is erratic. It felt like the whole year, every time we would start to get some momentum in markets or in sentiment, something big would happen, like a bank would fail, or FTC would block a deal where there was no overlap, or there would be geopolitical tension. And so I remember hearing from bankers, lawyers that advise on deals that activity was there, and then it would just fall apart at the finish line. And so it was just hard to get stuff over the line.
The big question, I guess, going into 2024, assuming that the market conditions are easing a bit here, are we just going to be talking about, I guess, new M&A type deals that make up the bulk of transaction, or are we going to get some of those failed deals from this year and maybe even prior get pulled into 2024?
So, of course, deal makers are optimistic, and anytime you talk about the prospect of rate cuts or even rate stabilizing, everyone says that the M&A engines are going to get fired up again. And so I think we'll see both. It'll be new deals, things that companies were reluctant or scared about pursuing this past year, and also a revival of some of the processes that failed last year.
And it's interesting to compare this current bout of doom and gloom and all this uncertainty to what we saw in 2020, 2021, because you have some great charts in your article, and you take a look at 2021, global deal values were $5.3 trillion. And if you think back to 2021, there was a lot of uncertainty then, too. What's different about this uncertainty versus what we saw in the pandemic?
Well, the biggest difference is that rates were at basically zero. Money was free, it was cheap, you could do anything you wanted, and the returns were always going to be there. You didn't have to do diligence. Now it's so much more expensive, and so that means it's harder to get things done. It's harder if you're an exec to convince your board that it's going to be worth it to put up the money, and it's harder to make the math work, frankly, on a lot of these deals just because of the cost of financing. But now that everyone's had time to get used to this environment, and if rates do fall, as some project they will, that could make it all easier for next year.
Yeah, I think free money makes most things easier. But as you point out in the story, there were some deals that got done. You think about what happened in the energy sector, for example, just really in the last couple months. What were some of the success stories of 2023?
So yeah, as you mentioned, there was a ton of activity in the oil sector. The two biggest deals of the year were the Exxon deal buying Pioneer and Chevron buying Hess. Those are both all stock deals, so the financing environment didn't impact them, and they benefited from their stocks going in the same direction. There was also a mega biotech deal. Pfizer bought Seagen for $42 billion earlier in the year. That deal just closed. They finally got the regulatory approval for that. And we saw a ton of activity across the rest of mining, healthcare. Tech was kind of not as busy as it has been, but there was the Cisco Splunk deal, which was about $28 billion in the fall.
Well, one hurdle that they're still going to have to deal with in 2024, I presume, are some of the regulatory issues here. Even if you have the money and the will to buy some of these companies, you have to be certainly a bit strategic. And we've heard that from some of the CEOs that have made deals, said that they really did sort of consider the regulatory issues before they actually put that in ink with whoever they were trying to buy.
Yeah, what we keep hearing is that companies are spending a lot more time on the front end thinking about their contingency plans and thinking about how they're going to approach the regulatory situation. So that might mean having a longer drop-dead date, or baking in reverse breakup fees, and having provisions that require them to say that they will go to court to fight a deal. One thing to look out for is, obviously there's an election in the U.S. next year. If there is a change in administration, that's something that some folks have said, could make certain deals easier. Obviously, we don't know how that's going to pan out, and it may not impact the activity that we see leading up to that, but it's something to look forward to, I guess, afterward.